Welcome back, Tradespooners. Let's take a look at today's pick for 23rd, 2014. We are going to be taking a look at getting long Disney. It's come up on our radar screening again, so that's ticker symbol DIS. Let's scroll down and take a look at the risk-reward ratings, and that's a 3, so it's on the lower end of that curve. And we're looking at the value momentum at the upper end of the curve at an 8. And as always, you can take a look at our proprietary Tradespoon analysis reports, where you're going to get an in-depth breakdown of both the fundamental and technical components of today's pick. Let's take a look at the price action for Disney, ticker symbol DIS. The close price the night before this pick was at $75.36, and the current high is $76.54. And the 52-week low is $48.78, so we're right off of those highs. We have seen a recent pop in implied volatility off of the lows of the year, about 32% pop. So that means that there's heightened interest or expectation, of potential movement in the underlying. Now, that is not directionally biased. We don't know if that's up or down. And in this case, our fundamental analysis is showing us, and as well as our technical, that the bias seems to be to the long side. The return on capital on the strategies that we're going to point out tonight in the option strategies are 60%, and the probability of success is right around 55%. The estimated move going into February expiration with a 50% probability is around $2.10. And again, we're looking at options that will expire in the third week of February on 2/22/2014. So let's take a look at the different strategies that we're suggesting tonight. We're looking to buy Disney, buy stock, DIS, at an entry price of $75.36 or better. Our target gain is $8.20 higher, so that's roughly going to get you out at around $83 and around 50 cents. So we put a sell limit good till cancel at that level. We'll also put a sell stop below our entry price by $8.20. So that would roughly get you out around $67 and some change. So you would have that sell stop. And both the sell stop and the sell limit would be working simultaneously good until cancel, and your broker should offer that. We're also going to put a buy the February $75 calls for a limit price of $1.95 or better. That means for $195 per contract. And our target gain is going to be $195 higher, so roughly you're going to be getting out right around that $3.90 to $4 range, and you can put that sell limit above your entry price at that level good until cancel. We're willing to risk the complete debit or cost per contract that we purchase. So that's why, again, we have to use prudent size management. No more than, let's say, 5 to 10% tops, especially for you small account holders, as far as exposure on size. And for you stock traders, about 3 to 5%. Now, in the option spread trade, we're looking to sell the February $75 puts, and we're going to collect $1.60. So we're selling those puts, and we're going to buy the $72.50 puts for 75 cents. That means that we have fixed risk. It's $2.50, the difference between these two strike prices. And for that risk, we're going to collect 85 cents. Now, our total risk is not 85 cents. It's the difference between the strike prices, 2.5, minus the 85 cents that we actually take in. So you're now looking at around $1.65 of risk. Now, we're suggesting that the max loss you want to take on this is 85 cents. So if, in fact, this spread starts to trade at $1.60 or higher, you would be closing this transaction or this credit spread for a loss. Now, for those of you that are, and the plus side of this is, if the stock at expiration stays above $75, we get to keep the credit received at $85 per contract. And as always, use our proprietary virtual trade here at Tradespoon, and you can start working out your risk and capital management plans and your comfort level with this particular strategy. Now, as we scroll down, we want to take a look at the price action, and we see that the Disney has been trending up but has been consolidating recently. We see under the key stock events that there are earnings coming up on 2/5/2014. That means for both options and stock traders, there could be a heightened expectation of potential movement, meaning that the estimated move average calculation could change as we get closer, especially if there are other extenuating circumstances like market movement in the overall market and so forth. But we do have a fundamental date here of earnings on 2/5, And you can also get information on the technical and fundamental indicators that we want to point out. And as always, we'll have a full list of news and commentary based on what's going on in the market when we came out with the pick. As always, if you ever need any questions, considerations answered, you can email us at info@tradespoon.com. Always keep track of our daily picks and performance. And for those of you that were wondering about the volatility structure, you could see that vol has come off of its lows. I'm just pointing it out here, both in the table and in the graph, that green line. So volatility is increasing going into that event, so keep an eye on it. All right, folks, well, that is today's pick for January 23rd, Long Disney. Thanks, and we'll see you tomorrow.